Welcome to The Explainer, where today we are digging into what might just be a game-changing earnings report from EHang, a company that's right at the cutting edge of the whole air mobility revolution.
All right, before we get into the weeds, just a quick but important heads up. Everything we talk about today is for educational purposes. This is absolutely not financial advice. We're here to break down the publicly available info, not tell you where to put your money. Okay, let's just start with the headline. This number you're looking at, this is the big one. For the very first time, EHang has hit a GAAP profitable quarter. We're talking a net income of 10.5 million RMB. You know, in the world of eVTOLs, which just burns through cash, this is a massive, massive milestone.
So the big question is, how on earth did they pull this off? Well, that's what we're here to find out. We're going to look at this landmark quarter, break down all the financials, see how their on-the-ground operations made it happen, track their global expansion, hear what management has to say, and then wrap it all up with the key takeaways for anyone watching this space.
You know, the fourth quarter of 2025, it wasn't just another 3 months for EHang. It really feels like a historic turning point. And honestly, not just for them, but maybe for the entire advanced air mobility industry. An industry that's been waiting for someone to prove this can actually be a profitable business.
Now, what's really wild here is just the sheer scale of this turnaround. Look at this. In just 1 year, they went from a pretty hefty net loss of almost 47 million RMB to a net income of 10.5 million. This wasn't some tiny improvement. It was a total flip. And it was powered by record-breaking revenue and a big jump in deliveries, hitting 100 units for the quarter.
So how did they manage to post these incredible results? Let's get a little more granular here and break down the key financial metrics that really tell the story of this growth and, this newfound profitability.
And here you can just see that top-line momentum in action. Total revenues for the quarter, they surged by a massive 48.4% compared to the year before. And this isn't just some fuzzy growth. It's a real acceleration, and it's driven by one thing: getting more aircraft out the door.
And here it is again, the main event, but visualized. I mean, just look at that swing. This leap from being deep in the red to solidly in the black is exactly what has the market buzzing. It really suggests that their business model is starting to work and that the company is hitting a whole new level of efficiency.
Okay, now let's zoom out and look at the whole year. We're seeing record annual revenues cracking that 500 million RMB mark, up almost 12%. And what's really encouraging for investors is that gross margin. It's holding strong at 62%. That shows they can scale up without killing their pricing power. Now, while the official GAAP net loss was pretty stable, they did hit non-GAAP profitability. All that means is if you pull out certain non-cash expenses, the core business was actually in the green for the second year running.
But look, these impressive numbers, they didn't just materialize out of thin air. Let's see how all of this connects to what they're actually doing on the ground. These results are the direct outcome of some major operational wins and a real focus on execution.
I mean, the key point here is that EHang is just firing on all cylinders. The big news, of course, is the upcoming commercial launch in China. But that's backed up by constant innovation, like the new long-range VT-35, a huge expansion of their manufacturing facility, and, of course, a record 221 eVTOLs delivered for the full year.
This is a monumental step. For years, this whole industry has been about demos and trial runs, but EHang is right on the edge of launching real, ticketed services for the general public in 2 major Chinese cities. This is that pivotal moment where the business model shifts from just selling aircraft to actually generating recurring cash from people taking flights.
Now, while China is obviously the first big launch pad, EHang is also at the same time running a very deliberate and methodical playbook to get a foothold and clear all the regulatory hurdles in some really key international markets.
Let's start with Thailand. That phrase, AM Sandbox Initiative, that's the key. It basically means they're working side by side with the regulators, not against them. They've done the test flights and, crucially, they think they're going to get their first commercial license outside of China right here. And they're already planning where to put their sites, which shows this is getting very real, very fast.
Then you hop over to Qatar, where the focus has been all about proving the tech in a really tough real-world environment. I mean, conducting flights with people in them, from point A to point B in the middle of Doha, that shows the EH216S can handle itself safely in a dense, modern city. Getting the official authorization there is a huge vote of confidence.
And in Japan, it looks like the strategy is all about building a wide presence and locking in strong local partners. I mean, when you're working with a huge name like Mitsubishi Estate, that gives you instant credibility. And expanding to 18 different cities,
That shows a systematic push to build market awareness and operational chops all across the country.
So, what do the people running the show see coming over the horizon? Well, their comments in the earnings release give us a super clear roadmap of their strategy and just how confident they're feeling about the future.
This quote from the CEO, for any investor, this is so critical to understand. The company doesn't see its future as just selling hardware. No, they want to be an end-to-end solutions provider. They want to manage the entire ecosystem. That is a much, much bigger and potentially way more profitable market to go after.
And then the CFO comes in and backs up that vision from a financial angle. See how he draws a straight line from getting commercial to scaling up the business and, most importantly, to making the company financially stronger? That's the playbook right there. Prove it works, then scale it up profitably.
And they're not just talking a big game, they're putting a hard number on that confidence. EHang is guiding for total revenues in fiscal year 2026 to be right around 600 million RMB. That's about an 18% jump year over year, which signals that they expect this commercial launch to drive steady, solid growth right on top of their record-breaking 2025.
Okay, we have covered a ton of ground, from deep diving into financial metrics to mapping out their global strategy. So let's just boil all this down to the most essential things you need to remember. If you only remember 3 things from all this, make it these. Number 1, the financial turnaround is real. They've proven it with their first ever GAAP profit. 2, this isn't some financial magic trick. It's being driven by real-world operations, record deliveries, and a commercial launch that's right around the corner. And 3, their path to going global is getting clearer and looks like it's being carefully de-risked by working with regulators and finding strong local partners. You know, this incredible quarter from EHang, it doesn't just raise questions about one company. It really leaves us with the critical question for the entire industry. After all these years of promises and development, are we finally witnessing the moment that advanced air mobility goes from a cool, futuristic idea to a real, commercial business?
If you found this breakdown valuable, you know what to do. Make sure to like this and subscribe for more explainers from us.